Hi everyone, welcome to the channel. Today we're going to be looking at American Express stock, right? If you're new to the channel, which you probably are, this is primarily investing content, so we're going to be looking at how the company looks in terms of, chart, financial stuff like that. We're not going to go super deep, but we're going to cover a lot of the basics, including risks and things like that. And we're going to just be looking at it as an investment. So personally, I do own American Express. I actually bought it fairly recently. Luckily, kind of around this dip around 230. So I actually looked recently and I was surprised by how much I was up on it, but that's cool. I like making more money. So the 1 year is kind of insane, right? I think it's timed into a dip. Yes, it is. So it's just been on a really good run since then. But even over the last 5 years, 139%. It doesn't seem too incredible with a lot of the stocks I'm looking at, but that has, I believe, outperformed the S&P 500 over that period, including dividends as well, because it's probably about the same yield over that time frame. But anyways, just because a company doesn't do better than the S&P 500 doesn't mean it's trash or anything like that. But American Express has outperformed it. So I really like American Express. It's probably my favorite credit card company, right? Because it's a good blend between growth, right? They're growing. They've been performing well, but also value, because actually a lot of the valuation is half that of a lot of the other ones. Like, for example, let's take a look at not Discover, MasterCard. Oh my gosh, I can never spell. That's embarrassing. MasterCard. I do have no idea. I think I hit my mouse is why I clicked onto the Schwab tab there. Yeah, so MasterCard's up 80%, PE 37, right? That's not horrible. I think 4P is around 33, but it's still not ideal considering. And now let's take a look at Visa, who is, I believe, being investigated for antitrust reasons. I don't know if it's the SEC or DOJ, but one of those. Up 55%, dividend about the same, 29. So American Express, as of right now, currently has good growth and the cheapest valuation. Now, it's significantly smaller than those two. Actually not by that much. But they've been doing well. They really have been doing well. And oftentimes, credit cards follow the consumer. So if consumers have been spending well, spending a lot, it'll do good. So if the economy were to take a downturn, generally they do bad, but it wouldn't do any worse than like a tech stock that's not profitable or something like that, right? But also it seems as if, fingers crossed, we've avoided the recession, we've hit the soft landing, Fed's cutting rates. There's still some iffy things with employment, but generally that looks good for this. Okay, so let's look into 4P as well so we can get the full picture. It's about flat, but it's still significant that it's only around 20, and there is forward growth that they are looking for after this year, and I'm assuming this will be better than predicted, assuming the economy even does better. So but yeah, it's fine. I prefer forward P to be lower just because that generally says the company's growing, but it's not a end all be all, right? Some other risks or benefits. Let's look at some. Generally, American Express targets people with better credit, right? So generally, their people stay spending even if the economy wasn't doing incredible, right? They kind of go over that, good credit. Individuals of good credit, maybe I'll say it like that. Dividend is meh, which is fine. I don't mind it, but unfortunately, you probably could not throw it into a dividend portfolio. I don't think so. I wouldn't be looking at it for that. But it pays a dividend. So if you require stocks to have a dividend, there's some advantage there. Let's take a little bit look. Let's look at the all-time. How's it performed over the last 10 years? So going back to 2014. 14, I believe it's underperformed some of the other ones, but even at this point right now, it's 3x'd, right? Almost exactly. 9 times 3 is 27, unless I'm just terrible at math. It is. So that's almost exactly 3x'd, which still is beating the market over a 10-year period as well. Dividend, it should still be about the same, but not including that. No, I like it. It's not sexy stock, right? It's not going to be like, oh yeah, it's going to 3x. I guess it's got a ceiling, right? Within a credit card company, you're never like, oh yeah, they hit it out of the park with this new iPhone or this new AI chip or this new, cooling, with SMCI or something like that. You're never, like SMCI is a good example. It like 10x over the course of a year, right? You're never going to have that with American Express. So that is a negative, but it's not a terrible negative, right? Like it's also got a pretty good floor as well. Let's look at some of ratings. 2, which is very good. It thinks it's going to be the top 2% of stocks over the next year performance for price. And it was reiterated 5 days ago. So that is interesting. I wouldn't have it quite that high, but I do like this stock. But if you believe Schwab and you like their ratings, they think it's going to do phenomenal. Morningstar gives it 2-star, Economic Moat Wide. I hate the 0, 3, 10 scaling here, but I'd pretty much agree. I'd put it around 7 personally, but there's bigger fish in it, but there's only so many credit card companies. Well, buy, long, hold, good ESG score, whatever you think of that. Dividend increased recently, right? We aren't going to dive super much into the financials just because there's only so much time. But yeah, they've separated themselves market cap wise from Capital One and Discover, and really only MasterCard and Visa are near their size as well. So let's take a peek at some of the analysts on Yahoo Think. What are they saying? I really don't mind analysts too much. Why is this not working? That's really loading. I personally don't put too much stock into what analysts think. But some people really do, so that's why I like to show it just in case. So 16 analysts recommend hold, so a lot of people. So there's definitely different from Schwab, because Schwab would give it like an A+. But oftentimes people, I think they do it where the month, if they don't change it, carries over. I don't know, but still, majority of people say hold and not buy, although there is some people that definitely say buy. Just a month ago, more people are saying buy than hold. So I don't like to do 1-year predictions. I think over the course of 5 years, this will be a good performing stock and a safe performing stock, right? As much as I love tech, and I generally have tech in my portfolio, I like to balance it out with some diversification, some, like, for example, Morgan Stanley for the financial institution that pays a great dividend and has good growth. American Express, good growth, a decent dividend as well. I like to own some REITs and utility companies, not necessarily because I think those will outperform my tech stocks, but it's good to have diversifications because oftentimes when tech is going down, those are going up. For example, over the last couple months, my REITs and my utilities companies have shot up, and a lot of the tech has gone down, and I've been able to move some of that money, into tech and also put more money into tech. All of my money went into tech. I actually did a video on that yesterday if you're curious what I bought, but I think tech is down. Oh, that's just factually. Stocks like ASML, which is a great buying opportunity if you don't mind buying a little bit high. It's always going to be high because it has insane growth, right? But anyways, I'm not going to get too much off into a tangent. So I appreciate you watching the video if you made it this far. YouTube really, really recommends my content out to new people when people leave likes. So even more than subscribing, even if you just like the video, don't want to watch another video from me ever again, that's cool. I would really appreciate it if you left a like, though, because it just helps out my channel a lot. But even if not, I appreciate you sticking around and watching this video. So, all right. I appreciate you watching. I hope to catch you next time. See ya.